So what a retail investor should do, this is something which is again dependent on the goal which you have set for your investment. I've already made a video on this कि जब भी investment की जाती है, investment should be goal oriented. और जब आप goal oriented investment करते हैं, you already know your risk appetite, you already know what kind of investment you have made, and you also know that what kind of returns you are expecting from a particular instrument. अगर आपने शेयर मार्केट के अंदर कुछ पैसा लगाया है, ऑलरेडी यू हैव इन्वेस्टेड सर्टेन परसेंटेज ऑफ योर इंटायर सेविंग्स इनटू द शेयर मार्केट, you already know that this is the kind of return I was looking for, and if you have gained that, you ideally should exit from the equity market, because equity markets somehow they are overvalued today. But if you know that you are doing value investing, and value investing means that you have invested into the companies which really have that kind of layer of growth in the near future, you should stay invested. What about the mutual funds and investors who are basically investing indirectly into the market through SIPs? For those investors, they should stick to whatever they are doing in the market today. They should either reduce their exposure towards the equity, or they should increase their exposure into the debt funds. That is something which retail investors or mutual fund investors or SIP investors should ideally do at this point in time. So this is something which I have followed as well. So I think this will really help shape your investments going forward. Even if the market comes down tomorrow, even if the market slips suddenly, your money, your invested amount will not be hampered or will not be impacted with a sudden shock. So there would be sudden shrinking in the equity, but that shrinking will not happen to your principal amount. Your principal amount will entirely be saved because you already have reduced the exposure into the equity markets. So I think these are some of the points which retail investors can look at. They can just think about it. So I'm not saying that you should ideally do this or you should do whatever I have said in this video. What I'm saying is you take your own decision that how much risk appetite you have, and then accordingly you decide for yourself that what is good for you. All I'm saying is equity markets, they are already into the red zone. There are certain companies which are overvalued. Nifty 50 as an index is overvalued, so you should be very much cautious. You should be taking a very close eye on the market on a daily basis. If not daily, on a weekly basis, you should track the markets regularly, track your investments regularly, keep an eye on them if you are an active investor or a trader. And if you are an indirect investor, also you are investing into mutual funds, SIPs, or those kind of indirect route of investments, you should keep a very close watch on your investments, because these investments are exposed to market risks and you already know that. So that's why you should be actively researching, actively looking at the markets, tracking them, making your portfolio diversified into a shape and form that your principal amount, or your principal at least, is protected, which you can save for yourself even if the market goes down. So I hope this video is helpful for all of you. Thanks for watching this video, and if you like this video, do share with your friends and family members. Stay safe, stay healthy. Thanks for watching.